All right, hello and welcome everyone to the Cerrado Gold Company webcast. Cerrado trades under the ticker CERT on the TSXV and CRDOF on the OTCQX. Again, my name is Robert Blum, managing partner here at Lytham Partners, and today I have the pleasure of having the CEO and chairman of Cerrado Gold, Mark Brennan. Mark will be walking us through the slide presentation, and then if time permits at the end, we will conduct a brief Q&A session. So Mark, thanks so much for your participation. I'll turn the floor over to you.
Thank you very much, Robert. Very much appreciate being invited to the summit. Today, I'd like to talk and provide a little bit of history on Cerrado Gold. Cerrado Gold is a producing junior producer looking to grow substantially as we move forward. And really, the focus on the company is to drive our cash flow through what we consider to be first-class assets. We have steady state production currently with about 55,000 ounces estimated over the course of the next 4 years. At $2,100 gold, this provides us with about a $25 million per year cash flow. Obviously, at today's prices, we're probably closer to $35 to $40 million of cash flow. Looking at the portfolio, we have two other assets that we're bringing into the development stage. One is Lagoa Salgada. We're currently in the midst of an acquisition of a company called Ascendant Resources, which includes the Lagoa Salgada massive sulfide pyrite project on the Iberian Pyrite Belt. This project is late-stage development, looking for a construction decision by 2025. This looks to be a low-cost producer of zinc-equivalent production. We also have a very substantive high-purity, high-grade iron ore project in Quebec called Mont Sorcier. This project is now under the development, looking at a feasibility study to be completed by Q1 26. And the economics here are very, very strong. We're a well-funded company. We have $21 million of cash currently, and we're owed another $15 million in the course of the next 18 months. Plus, we're also looking at a $10 million payment for an option on a project in Argentina. Combined with our existing $25 million per year of cash flow, we're very well funded to bring these projects to fruition with limited dilution. As I mentioned, we have three projects. Our lead project is Minera Don Nicolas in Argentina. It's in Santa Cruz, a very prolific mining belt where we have neighbors such as Newmont, Anglo, and Pan American producing substantial amounts of gold. This project is in its infancy. Even though we've moved production from 2021 from 20,000 ounces to 55,000 ounces currently, we're still very much in the early stages of exploration, and we currently have a 4-year mine life at 55,000 ounces, and we expect that this will grow as we put more effort into the exploration side. We're also, as I mentioned, in the midst of an acquisition of Lagoa Salgada, the main asset of a company called Ascendant Resources. This is a very, again, early stage, yet very large volcanogenic massive sulfide deposit on the Iberian Pyrite Belt, a very prolific production belt for thousands of years. What we're looking at here is an asset that while young and ready to go to production, has very, very extensive exploration upside that we anticipate will make this a world-class project. Initially, when we move into production in the second half of 2027, we're expecting cash flows here of about $100 million. Our third project in Quebec, in Canada, a very good jurisdiction for mining. Basically, we have a first-class iron ore project with 1.1 billion tons within the Chibougamau camp of Quebec. Basically, tremendous infrastructure, rail, port, local community, ready to bring a project of 5 million tons per annum, generating potentially $350 million of cash flow per year. Our target for construction would be 2028 with production in 2030. So we have three projects, all along a path that we think are will each fund the other projects, i.e. our cash flows from Argentina will be used for any equity deficiency we have for Portugal, and likewise we can use the funds from Portugal to fund our development of the Mont Sorcier project in Quebec. So again, really focused on generating strong cash flows and limiting dilution to shareholders. As it sits today, when we have the Lagoa Salgada project online combined with our MDM project in Argentina, we will remain a precious metals company with 62% of our production coming from gold and silver. You can see here 38% will be from critical minerals, but 62% coming from precious metals. If we look at our valuation today, we've got a pro forma market cap post-acquisition of Ascendant of just under $62 million Canadian, which is about 45 million US. We've got 21 million cash currently. We're generating 25 million of cash flow annualized at $2,100 gold. Plus we have two assets, one with a 150 million NPV and another one with about 1.6 billion of NPV. So based on the pro forma value, net asset value combined with our cash, we believe we're substantially trading at a discount that will be realized as we move these projects forward. Here shows our potential and for gold equivalent ounce production. So moving from the current level of 55,000 ounces to 100,000 ounces up to about 325,000 ounces by 2030. And these are all supporting the current valuations of MDN of 111 million based on 43-101 reports, 250 million combined with Lagoa, and then 1.865 billion combined with Mont Sorcier. And again, those valuations are based on 43-101 compliant reports. So we have a very strong and prolific story to advance. We believe that we can improve these economics, and we believe that we can expand these projects to further improve these projects. As I mentioned earlier, the real focus of Cerrado is three things. One, generating cash. You'll see the EBITDA growth profile here, very, very strong growth profile. I would think a company with $488 million of cash flow would trade at a substantial multiple to where we are today. The second focus we have is to be on projects that are actually top tier assets from the perspective that they're the lowest quartile of production. All our projects at this point are looking at lower quartile production costs, and that's something which is really important if we don't see the commodity, if we see any dips in commodity prices from today's levels. The final thing that we're looking at is assets that have the ability to grow, and all three of our assets have the capability to be substantially larger as we move forward and we develop more exploration. The first project that we have is the Minera Don Nicolas. We acquired this project in 2021. Again, we've taken this production profile from 20,000 ounces to 55,000 ounces currently. We're looking at 55,000 ounces a year till 2028 at a cost between $1,300 and $1,500 per ounce. Our expectation here is that this asset will grow. We will use the cash flow generated from the project to substantially expand our exploration program. From that perspective, we recently engaged a new geologist to come in and really relook at the property and look at the opportunities that we have. We believe that compared to others on the belt, we're the new kid on the block. Companies like Anglo and the Newmont and Pan American, those respective properties have been there for 20, 30 years. So we see the potential to really expand as those projects have as we move forward. We are looking now to move underground, and that's one of the greatest growth profiles that these other projects have moved towards. If I look again at $2,100 gold, we're generating annual average EBITDA of $50 million, $25 million of free cash flow. Looking at today's prices, substantially better story. So combined with our current cash, we have a good, strong position to really drive this project through underground as well as open pit operations. Here's the areas that we see. The open pit operations have led our expansion from the 20,000 ounces to the 55,000 ounces. There's still lots of areas that we have on our 330,000 hectare property, excuse me. We have two main targets at Palo Andrea, where we've seen some really high-grade material that we've mined in smaller pits at surface, running as high as 12 grams, 13 grams on a production basis. Our next step is to move to underground, and we're going to do that at Paloma, basically mining below the pit that we mined for 2 or 3 years already. We see lots of potential for the expansion of the resource, both to the north, south, in all directions. We also have some areas that are further away from our property. For example, Chispas. This is a project right next to the Nati discovery that Cerro Moro or Yamana discovered in 2019, now owned by Pan American. We see lots of potential to grow this type of operation outside of our core area on the block. As I mentioned, we're looking at an acquisition of Ascendant Resources. We've agreed to buy 80% of Ascendant Resources. This project is a high-value project, a new project on the Iberian Pyrite Belt. As I mentioned, the Iberian Pyrite Belt is one of the most prolific VMS hosts of mines in the world. Basically, this project has been late in being discovered, largely because it has about 130 meters of surface material covering it. But like many of the projects on the belt, what we've seen is this project being exploited through very successful geophysics. And geophysics, whether it be IP or gravity, has really led the drilling. And on this project, as I mentioned earlier, we've done 40,000 meters of exploration drilling, which has uncovered about 27 million tons. So for every meter we drill, we've historically come up with about 3/4 of a ton of material. Those percentages and the yields are extremely high on the belt. So what we're looking at is a project that we've taken to already a feasibility study completed in 2023. We had a post-tax NPV8 of $150 million with a 39% IRR. We're looking at adding substantial critical metals exposure, which seems to be a very positive thing in today's current environment. And we also see this project as being one of the lowest cost quartile producers in the world, with a zinc equivalent production of 59 cents per pound for the first 5 years and 79 cents for the life of mine, which is currently at 14 years. We're currently optimizing that feasibility study. We expect a new feasibility study to be produced in July, and we expect those numbers to be better. We're also looking for our environmental impact assessment study to be approved by the end of April. We've taken this project a long way, and we've actually been granted a status of project of national interest in Portugal. We have the very strong support of the local community as well as the Portuguese government, who want to use the Lagoa Salgada project as a beacon for other new mining companies and new projects to come to Portugal. As mentioned previously, we have a strong financial position. We've got some well-supported backers to help us fund the project. And as a consequence, we see very limited equity, if any at all, required to bring this project to production. So from that perspective, we see lots of potential for future expansion at this project as well. We're looking at an acquisition of approximately, for every share of Cerrado, for every one share of Ascendant, you'll receive one share of Cerrado. It's 7.8 shares of Ascendant, which means that the Ascendant shareholders will end up with about 21% of the final company, and Cerrado owning 80% of the shares. This is at about a 15% premium to the 30-day VWAP, which was announced on January 30th of 2025. We are expecting the shareholder meeting to take place on May 6th, and we expect within a week or so of the shareholder meeting that the transaction will close. We think this transaction is in the best interest of both shareholders, of Ascendant and Cerrado. We view from Cerrado's perspective that this asset is being acquired at a very attractive level, on the basis that it has been largely discounted in terms of the market's reaction to the shares. However, at the same point, we also feel that Cerrado shares are also trading at a discount, which provides a good opportunity for Ascendant shareholders to move forward. Again, this project has extremely strong economics. We're looking for the lowest quartile production of zinc in the world, 59 cents for the first 5 years. The project will throw off EBITDA of about $75 million for the first 5 years of operation under the current feasibility study that was completed in July of 23. We expect through the optimization that these numbers will improve. This asset is a polymetallic. We'll be producing 34% gold and silver, 30% zinc, 15% copper, 14% lead, and 7% tin. The important thing to note here is that we see lots of potential expansion through exploration, which we will start immediately upon the construction of the project as well. So our next driving points for this asset is we've completed the exploration we're going to do now until the construction decision in November. We're currently doing metallurgical work, which will be concluded by the end of May. We'll provide a resource estimate very shortly thereafter. We'll have an updated feasibility, optimized feasibility, which will be completed in July. And then we expect to see a construction approval in November, as well as a financial decision to take the project to construction, with project funding concluding at the end of the first quarter. So a very short timeframe to get this project from where we are today into a construction mode, and then it'll take us about 18 months to 2 years to get to construction. We're anticipating construction in the second half of 2027. As I mentioned, on the Pyrite Belt, we've seen lots of projects nearby that are substantially larger than we are. However, they've done substantially more drilling, and particularly on a yield basis. No one on the belt has had the yields that we have had at Lagoa Salgada. 40,000 meters of drilling has uncovered 28 million tons of resource. If we look at Sandfire, they acquired the Neves-Corvo property from Lundin, and basically from Matsa. Their yields would be double, triple the volume that we've had. So we're very pleased, and we believe very strongly that we're going to see some bigger exploration potential. Unfortunately, this chart is not showing the fact that on the Pyrite Belt you tend to see clusters on the top chart. The fact is that we have two clusters now, a north zone and a south zone, and like Sandfire's Aguatinitas and Boliden's Neves-Corvo, we anticipate that we'll see 3 or 4 or more zones coming in, which will grow the project fairly dramatically. And as I mentioned previously, many of the discoveries are led by geophysics on the Pyrite Belt, and we're only touching a very, very small part of the property that we have, and we anticipate that we're going to see many more discoveries as we move forward. Our second development project is Mont Sorcier. This is in Quebec, in the Chibougamau region of Quebec. Trying to highlight on the map on the right-hand side, we're in a very, very good jurisdiction from the perspective of infrastructure. Chibougamau has a town of about 7,500 community. Basically, they're a mining community historically. A lot of their population have to leave Chibougamau on a fly-in, fly-out basis to other mining camps in Canada. And what we anticipate is that once we can start getting the Mont Sorcier project moving, a lot of these people would much prefer to be at home, going home to their parents, their families in the evenings. So from that perspective, we're about 380 kilometers away from a deep sea port. That's with a common carrier rail line, a CN rail line, which means we have to get access to it under government pricing. The reality is that it's running today at about 30% capacity. The deep water port of Saguenay basically doesn't have a customer yet. We've signed a letter of intent with the Port of Saguenay for our material, and there's plenty of capacity for them to take our material. Port of Saguenay is a federally and Quebec funded project. They've put in about $200 million. It's a deep water port and can take very, very large ships for all our requirements that we require. So from that perspective, we're in a really strong, very positive jurisdiction in all manners as it relates to mining friendliness and wanting to see this project move forward. We did a PA on the project in 2021. The operating numbers were quite stellar. Our objective was to work with the existing infrastructure that's there today. And so we were looking at an annual production rate of 5 million tons. That's probably about the bottleneck we see where we may have to add a little bit of rail laybys, et cetera. But the capex on that was just under $600 million, including contingency and closure costs. We anticipate that moving into the feasibility study that'll be completed by the end of the first quarter, that number could raise by inflation, et cetera. But this project, based on the 600 million capex, was looking at about $350 million of cash flow and $235 million of free cash flow for 21 years. And that 21-year mine life was only using 35% of the total resource that we have available to us. So what we would see is a very natural perspective here to move this project forward. As I mentioned, we're looking at a feasibility study completed by the end of the first quarter of next year. We'll submit our environmental impact assessment in the third quarter. And then from there, we're anticipating that we'll be able to look at permitting in the first quarter of 28 with construction in 28 with first production in 2030. Unfortunately, it takes a little bit of time to get permits in Canada these days, although that is certainly improving as we see the politics and the election moving forward, where all the parties are encouraging mining acceleration in terms of projects. Again, just to highlight the fact here that we have very, very strong support for the funding of this project. Just like with our Portuguese project, we have UKEF, the UK Export Credit Agency, who are looking to support this project to provide us up to 70% of the capital requirement for the project. And we feel very comfortable that streams and/or royalty and offtakes will go a long way to requiring very limited equity to build this project. And the limited equity that will be required, we're very hopeful that we can use the cash flows from Portugal to develop this project. The really important thing here about this project is it's a high grade, high purity, 67% iron concentrate. And the importance there is that this qualifies as a DRI grade material. Direct reduction induction furnace iron ore is in great demand. Basically, the iron ore business today is growing at 1 to 2% per annum. All the market studies that we see show the DRI product material growing at about 9 to 10% per annum. So from that perspective, we don't see any threat to future pricing issues. We think that this project, no matter where the general iron ore pricing environment is, will always have a very robust economics. Again, I mentioned earlier, the current mine plan only is looking at the North Zone. We have a total resource, global resource of 1.1 billion tons. We're using about 300 million tons for the mine plan for 21 years. And from that perspective, we expect to see expansion coming very early after our initial production in 2030. So lots of growth in terms of operational growth, but also cash flow growth, which is what, again, the big driver of our business is all about. As I mentioned earlier, and I can't emphasize enough, as a junior company, cash and cash requirements are always a major consideration. Currently, we've got a cash balance of 21 million. We're generating 25 million at $2,100 golds in Argentina, and we have another 15 to 25 million coming in, 15 guaranteed over the course of the next 18 months, with 10 million on a potential option by the end of 27. I mentioned earlier, just we're supported by the Export Credit Agency of the UK. which is called UKEF. Generally, just happy to go into details at some further date if there are any questions. But the reality is that this type of funding, in my view, will be the new project funding for the mining sector. Many of the banks have left the sector. The export credit agencies are now starting to come into this space, and we've been very, very lucky to have the support so far of the UK government, which means that we get very low-cost funding with very long tenure, which is extremely attractive for the mining sector. Finally, we have a team that's done this before. We've been together for 20 years. We've developed many projects very successfully and made a lot of money for shareholders. And from that perspective, we think that there's a very strong path here to see a potentially multi-billion-dollar company at Cerrado. Here we have our post-acquisition pro forma shareholder position. We have 131 million shares outstanding, 141 million fully diluted, giving us a market cap of just under 200 million, sorry, 62 million. And from that perspective, we think that there just is a tremendous opportunity over the course of the next few years for shareholders to reap tremendous rewards as we grow the cash flow and try to maintain this undiluted share structure. That's all I have to say for the moment. Thank you very much for your time and your attention.
Fantastic. Mark, thanks for that great presentation. Very informative. Just maybe 2 minutes left here. I want to just touch on a couple of questions. Let's go to Argentina first. Historically, it's been a very tough place to operate, given sort of the new government and some of the policy changes there. What are you sort of seeing from that change that might affect your operations there?
Well, I think two things with the new government. You have a micro perspective and you have a macro perspective. And looking at the micro perspective, I think everybody in Argentina is now trying to pull together to make things better. And that's helped with the unions. It's helped with the local governments. So we feel very, very strongly supported on a micro basis. On the macro basis, the biggest impediment that we've had has been the currency controls. And obviously, the federal government has been working very, very hard. And we're very confident by the end of the year that currency controls will be removed, which will be a fantastic thing for the mining sector.
And again, that mine there in Argentina, it's relatively short life, right? What are sort of the plans to extend the mine life, and or what other plans do you have for the operations there?
We're anticipating spending at least $15 million over the course of the next 3 years in exploration, and much of that will be front loaded depending on success. So we have 330,000 hectares. It's a size of Rhode Island. It's a big property with lots of potential opportunities. What we really need to do now is just go and explore, and we're very comfortable that even this year we'll see some very successful exploration results coming out.
Right. Talk about valuation here, right? Certainly appears to be an undervalued situation, but what do you sort of think of the key milestones or deliverables that will help the market realize, what I assume in your opinion would be a more fair valuation of the stock?
Well, I think the closure of the acquisition of Ascendant will get rid of a lot of uncertainty, and that'll get us onto the path that we've described today. But then subsequent to that will be the feasibility study for Lagoa Salgada, the optimized feasibility study. I think it's going to show much better economics. Then we'll have the construction decision in November period or the fourth quarter. Once we can show that we can fund that project with very limited dilution, if no dilution, that'll be the next step. And then by the end of the first quarter next year, we'll have the feasibility study for Quebec. And again, I think those numbers are going to be extremely strong. So I think combined with the fact that we've been improving our balance sheet, increasing our financial strength, which will give us lots of opportunity for people to see that we have a lot of stability moving ahead.
All right, fantastic, Mark. Well, I certainly have more questions, but I know we're up against the clock here. So thank you very much for your participation in the summit here today. I want to thank everyone as well for watching. If there are additional questions that you might have, and I can help coordinate a connection between yourself and management here, please send me an email. That's Blum, BLUM, @lythampartners.com. Again, we have additional presentations and fireside chats coming up next. So everyone, please stick around. Again, Mark, thanks so much for your time today. Greatly appreciate it.
Robert, thank you very much for your time.